What is going on, everybody? Welcome back to the channel. You are tuning in to another edition of The Deep Dive.
Hey, everyone.
This is the show where we try to strip away the noise and get straight to the truth of what makes the markets tick. I am your host, the handsome trader.
The man, the myth, the legend.
Ha, I wish. The man who spends way too much time staring at candles so you don't have to.
Yeah.
I really hope you are having a fantastic day wherever you are.
Absolutely.
Whether you're grabbing that first cup of coffee or you're stuck in traffic and I know you're out there. You're sitting in front of your screens wondering where all the green went.
I know that feeling all too well.
You're in the right place. We have a massive deep dive today. We're going to unpack something that, honestly, I wish I had 10 years ago. It would have saved me a lot of stress.
And a lot of money.
And definitely a lot of money. But before we get into the weeds, and trust me, we are going deep, I just have one small request. If you get value out of these conversations, if we're helping you stop blowing up accounts, please smash that like button, share it, and subscribe to the channel with all your sincere heart. It really, really helps us out.
It does. It means the world.
Today, I'm joined by a very special guest. We have a veteran in the house. We're calling him Doc.
It's good to be here.
Now, Doc isn't some guru who rented a Lambo for a photo shoot to sell you a PDF.
No, definitely not.
Doc is the real deal. He's been in the trenches, seen it. Bull markets, bear markets, you name it. He specializes in trading psychology and, really, fixing the broken mindsets that keep us from making money. Doc, welcome to the show.
Thank you so much, handsome trader. It is a real pleasure to be here. You know, trading can be a very lonely game.
Oh, yeah?
We sit in rooms by ourselves, staring at these screens, battling our own brains. So I always appreciate the chance to talk about it and share what I've learned, usually the hard way.
And we love the hard lessons here. The goal is for us to learn them without losing the money you lost.
That's the smart way to do it. That's the efficient way. If I can save just one person from the mistakes I made, then my losses were just tuition fees for everyone else.
I love that. So let's get right into the hook of today's deep dive. We're calling this the big lie. We look at the stats, Doc, and they're just brutal. 95% of retail traders lose money. And it's not because they're lazy.
Not at all.
I know guys who work 12-hour days, they study, they buy the courses, they learn the indicators. Smart people. And yet, the account balance just keeps going down. Why? What's the missing link?
It's the million-dollar question, isn't it? And the answer is, well, it's a little painful because it goes against everything we're taught.
How so?
The problem isn't a lack of effort. The problem is that most traders are staring at noise, and they're convincing themselves it's opportunity.
Noise versus opportunity. Okay, that's a big statement. Break that down for us. What do you mean by noise?
I mean that most traders are addicts, and I don't use that word lightly. They're addicted to the chaos of the lower time frames. They think if they just look closer, zoom in more, act faster, they'll find the secret.
They're trying to find a movie in the static.
That's it, exactly. They're looking at random vibrations and thinking it's a symphony.
I want to park here for a second because I know this is going to trigger some people. When you say lower time frames, you're talking about the 5-minute chart, the 1-minute chart, the fast stuff.
Precisely. The 1 minute, the 5 minute, even the 15 minute. This is the trap. This is where trading accounts go to die.
But playing devil's advocate here, that feels like real trading to people. You see the price moving, candles painting every second. It feels like you're doing something.
Yeah.
Why isn't that just detailed analysis?
Okay, let's visualize it. I want everyone listening, just picture yourself at your desk. You got your coffee, you pull up a 5-minute chart of, I don't know, some volatile stock. What do you actually feel?
You feel action. A big red candle drops, your stomach drops. A green one rips up, you get that hit of FOMO, of excitement. It's like a sports game in fast forward.
Exactly. You're having a physiological response. A candle spikes, your heart rate goes up. It feels like information. You think, wow, I'm plugged into the matrix. I can see every tick.
Right. It feels like you have a microscope.
Yeah.
And a microscope is good, right?
Yeah.
More detail is better.
In surgery, yes.
Yeah.
In trading, usually no. Because what you're seeing on that 5-minute chart isn't market structure.
So what is it?
It's chaos pretending to be structure. You're not seeing the trend. You're seeing a bank's algorithm slicing up a huge order. You're seeing panic from retail traders who read a headline wrong.
So it's a mix of mechanical noise and emotional noise.
It is pure noise. And the thing about noise is, it's random. You can't build a business predicting randomness, but because it looks like a pattern, a double bottom on the 1 minute.
Huh. I've definitely been there.
We all have. We trick ourselves. We project order onto chaos because our brains hate chaos.
And then 5 minutes later, it's completely invalidated, and I'm sitting there wondering what I did wrong.
And that's the cycle. Find a pattern, it fails. Blame yourself. Look closer. Find another pattern, it fails. I know this cycle because I lived it. I didn't just read about it.
Tell us about that, because looking at you now, you're so calm. But I'm guessing you weren't always Doc.
Oh, God, no. Far from it. Go back 10, 12 years. I spent 2 solid years of my life glued to the screens. I was a scalper.
You wore the badge with pride.
I did. I had the multi-monitor setup, the gaming mouse, the whole 9 yards, trading the 1-minute and 5-minute charts exclusively. Thought I was Gordon Gekko.
The sniper mentality. Get in, get out, take the cash.
That was the dream. I truly believed that if I just focused hard enough, if I analyzed every little shadow on those 1-minute candles, I could find the perfect entry. I thought I could beat the market by being faster.
How'd that work out for you?
It was a complete disaster, an absolute train wreck. I was working harder than ever. I was stressed out of my mind. My eyes were burning by noon every day. And my account, it was just bleeding, death by 1,000 cuts.
So you weren't blowing up in one big trade.
No, and that's almost worse. If you blow up, the pain is sudden. You learn or you quit. This was a slow bleed. Make $20, lose 25. Make 50, lose 60. I was just churning my account, making the broker rich.
That is the worst feeling. It's like you're on a treadmill, sprinting, but you're actually moving backward.
Perfectly put. And the tragic part was, I thought the solution was more focus. I thought, I need to watch closer. I need another screen. I was trying to read a map by looking at it through a drinking straw. I saw the paper texture, but I had no idea where the road was going.
That's a powerful image. I want to help our listeners visualize this even more, because noise can be abstract. You have this great analogy about a river. Can you walk us through that?
Yes. This is what saved my career. So I want everyone listening, unless you're driving, just close your eyes for a second. Imagine you're standing on the bank of a huge, powerful river.
Okay, I'm there. I can hear the water.
Now look down at your feet. Pick one tiny square foot of water right next to a rock. Stare at it. What do you see?
I see. Chaos. Water crashing, white foam. I see little swirls and eddy where the water is actually going backward for a second.
Exactly. You see water going left, right, backward, splashing up. If you only looked at that one spot, you might conclude this water flows upstream, or this water has no direction.
Right, because my sample size is way too small. I have no context.
Correct. Now, in your mind, hop in a helicopter, fly up 1,000 feet, look down at that same river. What do you see now?
Well, totally different picture. I just see a massive, massive body of water moving relentlessly in one single direction, downstream.
The truth becomes undeniable. The river is flowing south. All those little splashes and backward eddies you saw, that was just surface noise. It didn't change the fact that the river itself is crashing downstream.
And this is the market.
This is the market. The lower time frame, that 5-minute chart, is the swirl behind the rock. It's noise. The higher time frame, the daily, the weekly, that's the river. That is the truth.
That's terrifying when you apply it to money. Because if I'm buying on that 5-minute chart,
you might be betting on that little swirl that's going upstream. You see a little green candle and you think uptrend, but the entire weight of the river, the daily chart, is crashing down on you.
You're swimming against a tidal wave and you don't even know it.
You get crushed. The market structure will run you over and it won't even notice.
You mentioned you learned this the hard way. Was there one specific aha moment? Or was it just a gradual thing?
Oh, there was a moment. It's burned into my memory. I call it the $50 lesson.
$50. That sounds cheap. I know guys who've had $50,000 lessons.
It wasn't about the money. It was the psychological breakthrough. The moment the veil lifted. It was a Tuesday morning. I'm trading a popular tech stock on my 5-minute chart. And I see it.
Perfect setup.
The holy grail. A little bull flag consolidating right after the open. Volume was perking up. Everything I'd ever read said buy.
I know that feeling. Your palm starts to sweat a little. You're hovering over the buy button thinking, this is the one.
Total conviction. I hit the button, click. I'm long. And for about 2 minutes, it looked great. Pushed up a few cents. I'm in the green, feeling like a genius.
And
then, bam, a massive red candle just prints out of nowhere. It slams down, wipes out my entry, hits my stop loss. All in about 90 seconds, I lost $50.
Just like that.
Just like that. And I was furious, not sad, angry. I felt betrayed by the market. I'm yelling at the screen. But the pattern was perfect.
Did you try to revenge trade it?
I almost did. But for some reason, maybe I was just so tired of losing, I paused. And I zoomed out. I clicked on the daily chart. Now, you have to understand, back then I thought the daily chart was for grandpas.
Boring. Too slow.
Right. Who looks at one candle a day. But I clicked it, and my jaw just It hit the floor. I felt sick.
What did you see?
A brick wall.
Yeah.
The stock had hit that exact price level 3 times in the last 6 months and sold off violently every single time. The daily chart was screaming, "Danger, do not buy here."
But the 5-minute chart said go.
The 5-minute chart saw a tiny little push right into a concrete dam. The daily chart showed the dam. I was buying into a wall because I was looking too close to see the bricks.
That is a horrible feeling, realizing you were the sucker at the table.
It was humbling. I realized I didn't lose because of bad luck or manipulation. I lost because the noise contradicted the structure. And structure always wins.
Structure always wins. That's a t-shirt right there.
It has to. Think about who creates that structure. It's not us, it's institutions, it's the big money. And you know what? They feast on traders who only look at the 5-minute chart.
You think they know? They're targeting us.
Oh, they know. The algorithms are programmed for it. They know where retail traders put their stops. So they push the price up just enough to trigger the breakout, get everyone to FOMO in, which gives them the liquidity they need.
To sell.
To sell. They sell into our buying and slam it right back down. We're just providing the fuel for their exit. We are the meal.
This brings up a really good point about psychology. Why is it so hard to stop? If a stove is hot, you touch it once, you learn. But traders keep touching the 5-minute chart over and over. Why?
It's the addiction to being busy. It's a cultural thing. Think about a regular job. If you're at your desk, typing furiously, looking stressed, you're a good employee.
Right. If you're leaning back with your feet up, thinking, the boss thinks you're lazy.
Exactly. We bring that employee mindset to trading. The lower time frame feels like work. You're clicking, you're scanning, you're stressed. It satisfies that need to feel like we're doing something.
I suffered for this profit, therefore I deserve it.
Yes. But the higher time frame, it feels lazy, it feels like cheating. You look at the chart, you place an order, you set a stop, and then you walk away for maybe 3 days.
That is excruciating for most people. Sitting on your hands is the hardest trade to make.
It is. Boredom is the enemy. There's a quote I love. Boredom makes people feel like they aren't trading. So what do? They invent trades on the 5-minute chart just to relieve the boredom. They're trading for entertainment, not for profit.
Wow. Trading to alleviate boredom, that's profound.
And the market punishes hyperactivity. It rewards patience. It's one of the only jobs in the world where doing less gets you more.
Which is completely counterintuitive.
It is. You have to rewire your brain to accept that your job isn't to click buttons. Your job is to make good decisions, and good decisions take time.
I want to ground this in some hard numbers.
Yeah.
You told me about a friend of yours who went through this. I think his story is really relatable.
Yeah, my buddy. Smart guy, an engineer, loves data. He was trading a breakout strategy on the 15-minute chart.
Okay, so still pretty fast-paced.
Very much in lower time frame territory. He was grinding. He had spreadsheets, journals, everything. But his stats were... well, they were mediocre. He had a 48% win rate.
Basically a coin flip.
Worse than a coin flip, once you add in commissions, he was working 40 hours a week for free. He was stressed, tired, and just breaking even.
The definition of trader's hell.
So I made him a proposition. I said, don't change your strategy. The rules are good, but I want you to apply it only to the daily chart.
And what did he say?
He hated the idea. He fought me on it. He said, Doc, it's too slow. I'll only get like 3 signals a month. How can I make a living off that?
That classic fear, if I'm not trading, I'm not earning.
Right. But he was so burnt out, he agreed to try it for 90 days.
And the results?
His win rate went up, but not by a crazy amount. It went from 48% to about 53%.
Okay, so that's good. It makes it a winning system, but it's not life-changing.
But wait, the magic wasn't the win rate. It was the profit per trade. His average profit jumped from $80 to $320.
Whoa, hold on. That's 4 times the profit on every winning trade.
4 times.
How? Why does a daily breakout pay more?
One word, continuation.
Continuation, explain that.
Think about it. When a 15-minute chart breaks out, who's behind that move? A few day traders, maybe an algorithm? It pops up, runs for 20 minutes, and then fizzles out.
It runs out of gas.
Exactly. But when a daily chart breaks out, when a stock clears a level it hasn't passed in 6 months, that's not day traders, that is real money. Pension funds, mutual funds.
The whales.
The whales. And when they buy, they don't buy for 15 minutes, they buy for weeks. The trend has real momentum. It runs for days, sometimes weeks.
So your friend was catching a ride on a freight train instead of chasing a scooter.
That's it, exactly. He traded way less, but made way more, because the quality of the moves was just superior.
Quality over quantity. It sounds so simple.
Simple to understand, hard to execute.
Let's dig into those institutions. I think retail traders imagine Goldman Sachs is in there scalping for pennies like we are.
Haha, absolutely not. It's a logistics problem. Imagine you're managing a fund with $10 billion. You want to buy $500 million worth of Apple.
Okay, that's a mountain of cash.
Can you just dump a $500 million buy order on a 5-minute candle?
No way. You'd move the whole market against yourself.
Exactly. There's not enough liquidity. You get terrible prices. You're an elephant in a kiddie pool. So they have to be patient. They accumulate over days or weeks. Their footprints only show up on the higher time frames.
The daily chart is like a whale tracker.
It is. On the 5-minute, you see the noise of their algorithms. On the daily, you see their true intention.
So who are we even fighting on the 1-minute chart then?
That's the scary part. You're fighting high-frequency trading firms. They have supercomputers next to the exchange to shave milliseconds off their connection speed. And you're there with your home Wi-Fi.
It's a plastic spoon to a gunfight.
It's suicide. But here's the beauty. On the higher time frame, you don't fight them.
You join them.
You draft behind them. You see the daily chart break out and you say, the whales are moving north. And you just hop on for the ride. You let their money do the work.
That is such a relief. I don't have to be the fastest, just observant.
Stop trying to beat the market. Start following it.
Doc, you have sold me. I want the peace. For the listeners who are ready to make the switch, what does the new routine actually look like?
It's a detox for sure. When I made the switch, my whole lifestyle changed.
Give us the stats, before versus after.
Before, I was taking maybe 15 trades a week, high stress, frantic trades. Screen time was 8 hours a day, minimum.
And after?
After I switched to the daily, my trade frequency dropped to maybe 3 trades a week.
Wow, massive drop.
Huge. And my screen time, it went from 8 hours a day to maybe 90 minutes.
What did you do with all that time?
I got my life back. I went to the gym, spent time with my family. And the crazy thing is, my stress went to 0 and my income doubled in the first 6 months.
Work less, live more, make more. That's the dream.
It's the only way to survive this game long term.
So give us a hard rule. For someone starting this tomorrow, what's the rule?
My rule for anyone who is struggling is this, the 4-hour hard deck.
What does that mean?
You are not allowed to look at, analyze, or click buttons on any chart lower than the 4-hour, period.
Cold turkey. No peeking at the 5-minute.
Cold turkey. Delete it from your screen. It's like keeping junk food in the house when you're on a diet. Get rid of the temptation.
So what's the workflow?
I use the weekly chart on Sunday to map out the big river flow. Then during the week, I use the daily to find my entries. I wait for the candle to close, make my decision, set my orders, and I close the laptop.
And you count the signals.
Yes. This is a great exercise. Look at a 5-minute chart for a week. Count the signals. You might see 50.
And most are fake outs.
Exactly. Now switch to the daily for that same period. You might see 3 signals. But those 3, they're real. Do you want 50 coin flips or 3 high probability investments?
I'll take the 3. But I have to ask, what about the scalpers? The people who love the action? Are they doomed?
Not necessarily. You can scalp, but, and this is a huge but, you must align with the higher time frame.
The HTF is the boss.
The HTF is the boss. Never, ever go long on a 5-minute chart if the daily chart just hit a brick wall of resistance. I don't care how perfect that 5-minute signal looks.
Check the weather report before you go outside.
Exactly. If the daily is in an uptrend, you only look for 5-minute buy signals. You ignore every single sell signal. The HTF gives you permission.
I like that. HTF for permission.
That's the golden rule.
Doc, this has been incredibly eye-opening. It's so easy to get lost in the weeds and forget that the forest is what matters.
It is. The market is designed to entice you into bad decisions. As Buffett said, it's a device for transferring money from the impatient to the patient.
And that applies to trading just as much as investing.
Absolutely. Be the patient one.
So let's recap for the handsome trader army.
Yeah.
Number 1, the lower time frame is mostly noise. Don't be fooled by the static. Number 2, the higher time frame is the river. That's the truth. Follow the institutional money.
Find the flow.
Number 3, being busy does not mean being profitable. Embrace the boredom. The market pays you to wait.
That's the big one.
And number 4, don't swim against the river. Check the daily chart. If you need to, use the 4-hour hard deck rule to detox.
That sums it up perfectly. If you can master those 4 things, you're ahead of 99% of traders out there.
Doc, thank you so much for coming on the show. It takes guts to admit those early losses, but I know it's going to save someone listening right now from making the same mistakes.
I certainly hope so. If one person deletes their 1-minute chart today, it was worth it. Remember my motto, change your perspective, change your account.
Change your perspective, change your account. Love that. All right, guys, we are wrapping up. But before we go, we have to do the responsible thing. Please listen closely to this disclaimer.
Please do.
The content in this deep dive is for knowledge sharing and personal experience only. It is not investment advice. Financial investment always involves risk. Please do your own research and take responsibility for your own decisions.
Absolutely. Trade safe, everyone. Protect your capital.
And don't forget, if you got value from this, smash that like button, subscribe to The Handsome Trader, and leave a comment. Are you Team Daily or Team 5 Minute? We want to hear from you. Until next time, stay handsome, stay profitable, and zoom out.
Goodbye.
See ya.